Starting a non-emergency medical transportation business can cost you as little as $15,000, or it can quietly bleed you dry even if you're booked solid every single day. Here's the number nobody tells you up front. 70% of new NEMT providers fail within their first few years, not because there's no demand, but because they run out of cash waiting for Medicaid to pay them back. So is this business actually worth starting in 2026? Let's break down the real numbers, not the YouTube hype version. Elite Med Financials. This video is for people who want a service-based business with real, government-backed demand behind it, and who have some patience for paperwork and licensing. If you want fast money or you hate dealing with insurance companies and compliance rules, this isn't for you. Stick around, because I'm going to walk you through exactly where the money goes, how long it takes to break even, and the mistakes that kill most operators before they hit month 6. So what is NEMT, exactly? Non-emergency medical transportation is a transportation service for people who need a ride to a medical appointment, dialysis, physical therapy, or a pharmacy, but don't need an ambulance. Think elderly patients, people with disabilities, or anyone without reliable transportation. You make money by driving patients to and from appointments and getting reimbursed, mostly through Medicaid, sometimes through Medicare Advantage plans, private insurance, or private pay customers who book you directly. Now let's talk demand, because this is where the business actually makes sense on paper. The NEMT market is currently valued between roughly $10 and $12 billion, and it's expected to grow to somewhere between $15 and $20 billion by 2030.
Why?
About 11,400 baby boomers turn 65 every single day in 2026, and roughly 4 million Americans miss or delay medical appointments every year simply because they don't have transportation. This isn't a trend that could reverse next year. It's demographics. On the policy side, 21 states raised their NEMT reimbursement rates in 2024, with 15 more planning increases in 2026, so the money on the table is actually getting bigger in a lot of states, not smaller. Elite Med Financials plus 3. Now the part you actually came here for. What does it cost to start, at the bare minimum, with one vehicle? Category low-end high-end vehicle, used, ambulatory or wave, $16,000, $23,000, ADA modifications, ramp, tie-downs, $3,000, $10,000, licensing and permits, $500, $3,000, commercial insurance, deposit, $2,000, $6,000, dispatch software, first month, $49, $150 basic marketing, logo, listings, $500, $500 working capital reserve, $10,000, $15,000, miscellaneous, background checks, office basics, $1,000, $2,000, total minimum investment, $33,000, $60,000, $500. Let's talk about where that money actually goes. Your vehicle is usually 40 to 60% of your total budget, and this isn't optional spending, it's your entire business. Insurance is the next big chunk because commercial auto coverage for medical transport is expensive, often $4,500 to $15,000 a year, and insurers usually want 20 to 35% of that upfront as a deposit before they'll even bind the policy. Licensing depends heavily on your state. Some are quick and cheap, others require inspections and background checks that take weeks. And working capital, this is the one people skip, and it's the one that kills businesses. Medicaid typically pays claims 30 to 90 days after the trip, which means you need enough cash in the bank to cover 2 to 3 months of expenses before your first payment even arrives. Monthly operating costs for a single vehicle operation typically land between $4,500 and $6,000. That covers fuel, driver wages if you're not driving yourself, vehicle maintenance, insurance premiums spread monthly, dispatch software, and phone or admin costs. Now, income potential, and I'm going to give you 3 honest scenarios, not a fantasy number. Conservative. If you're only doing 4 to 5 trips a day at a modest rate, you're looking at maybe $2,000 to $3,000 a month in profit after expenses. Realistic. With 6 to 8 trips a day and steady broker contracts, $3,500 to $6,000 a month is achievable for a single vehicle. Optimistic. If you're in a high reimbursement state, running efficient routes, and mixing in private pay clients, $8,000 to $10,000 a month is possible with one van. Across the industry, profit margins typically run between 15 and 40%, depending heavily on your state's reimbursement rate and how tight your operations are. Break even. With a startup cost around $40,000 and realistic monthly profit around $4,000, you're looking at roughly 10 to 12 months to recover your initial investment, assuming you don't hit major vehicle repairs or a slow Medicaid enrollment period, which brings me to mistakes. The biggest mistake people make is underestimating the Medicaid payment gap. They spend everything on the vehicle and have nothing left to survive the first 2 or 3 months of waiting for reimbursement. Second mistake, skipping proper licensing steps because they seem slow, and then getting shut down mid-operation. Third, not researching their state-specific reimbursement rate before buying a vehicle. Some states pay far better than others for the exact same trip. And fourth, treating this like a side hustle when it actually requires real operational discipline, scheduling, documentation, and compliance. Where's the opportunity, then? Underserved niches include rural areas where big NEMT companies don't want to operate because trips are long and less profitable per mile, dialysis-specific routes since those patients need rides 3 times a week for life, and specialized stretcher transport, which pays more but has higher barriers to entry. Your differentiation isn't going to be price, it's going to be reliability. Late or missed pickups are the #1 complaint in this industry, so if you're consistently on time, you already beat half your competition. Here's how to actually start. Step 1. Research your state's Medicaid NEMT program and reimbursement rate before you spend $1. Step 2. Register your business as an LLC and get your EIN. Step 3. Secure your vehicle, used and ADA compliant is the smart starting point. Step 4. Get your commercial insurance and state licensing sorted in parallel, since licensing timelines vary. Step 5. Enroll with your state's Medicaid broker. This is what actually gets you trips. Step 6. Set up dispatch and scheduling software before you take your first ride. Step 7. Start with 2 or 3 referral partnerships. Dialysis centers and nursing homes are a great place to begin. On that note, you will need a few systems in place. You need dispatch and scheduling software to manage pickups and avoid double booking. You need basic billing software to track Medicaid claims and reimbursement timing, since manual tracking here leads to lost revenue. And eventually, a simple website and booking system so private pay clients and facilities can find and book you directly. This matters because in this industry, brokers and facilities check whether you look legitimate and organized before they hand you consistent trip volume. If you want this set up properly instead of piecing it together yourself, SoftAngles can build your website, booking system, and CRM specifically for how NEMT operations actually run. You can book a free consultation and get a cost estimate. Link is in the description. For marketing, online, claim your Google business profile immediately. Most facility referrals start with a Google search. Offline, this is honestly where NEMT is won. Walk into dialysis centers, nursing homes, and small clinics with a one-page flyer and just introduce yourself. On a low budget, referral relationships beat paid ads every time in this industry. To scale, once you're consistently full with one vehicle, add a second van before you add anything else, because your existing broker relationships and referral partners will fill it faster than starting from zero in a new area. Now the risks. Fuel and maintenance costs eat into thin margins fast. Driver turnover in this industry runs 50 to 100% annually because the wages are modest for a demanding job. And reimbursement rates can change with state budget cycles, so you're not fully in control of your own pricing on the Medicaid side. Quick do's and don'ts. Do keep at least 2 to 3 months of operating expenses in reserve before you launch. Do build direct relationships with referral sources. Don't rely on brokers alone. Don't skip insurance coverage to save money. One incident without proper coverage can end the business entirely. Don't expand to a second vehicle until your first one is consistently profitable. So, final verdict. Is NEMT worth starting in 2026? For someone with $35,000 to $60,000 in starting capital, patience for licensing and paperwork, and a genuine interest in operations, yes, this is a realistic, demand-backed business. It should be avoided if you're looking for fast cash, or if you don't have the cash reserve to survive the Medicaid payment delay, because that's genuinely what takes most new operators out. If this breakdown was useful, subscribe, because we're covering more real, numbers-based business breakdowns like this every week. And if you're ready to move forward and need your website, booking system, or CRM built properly from day one, book a free consultation with SoftAngles. The link's right below in the description.